Hello everyone, I am Mrs.R.KAVITHA, Assistant Professor and Head, Department of Business Administration, A.D.M.COLLEGE for Women, NAGAPATTINAM. I am going to take the topic Management Accounting. First one is meaning and definition of Management Accounting, characteristics of Management Accounting, scope of Management Accounting, functions of Management Accounting, need and importance of Management Accounting, limitations of Management Accounting, functions of Management Accounting. Okay, let us see the meaning of Management Accounting. Management Accounting is comprised of two words, management and accounting. It is the study of managerial aspects of accounting. Management accounting involves the process of preparing management reports and accounts that provide accurate and timely financial and statistical information to managers. It helps in decision making, planning, and controlling the organizational activities. Definition of Management Accounting. Management accounting is concerned with accounting information that is useful to the management. According to John Fisher, management accounting may be defined as the application of accounting techniques to the provisions of information designed to assist all levels of management in planning and controlling the activities of the firm. Then, nature or characteristics of management accounting. These are the following characteristics of management accounting: providing accounting information, cause and effect analysis, use of special techniques and concepts, taking important decisions, achieving of objectives, no fixed norms followed, increases in efficiency, supplies information and not decisions, and then concerned with forecasting. Providing accounting information. Management accounting is based on accounting information. The collection and classification of data is primary function of accounting department. It is generating and delivering relevant information on non-financial data to assist managers in decision making, planning, controlling, and evaluating business operations. Next one is cause and effect analysis. Financial accounting is limited to the profit and loss and finding out the ultimate result. That is, profit or loss of management accounting goes a step further. Cause and effect analysis in management accounting is a method used to identify and understand the reasons behind financial performance and operational results. It involves analyzing the relationship between various factors to determine how certain causes lead to specific effects. Then, use of special techniques and concepts. Management accounting uses special techniques and concepts to make accounting data more useful. Management accounting employs various special techniques and concepts to support decision making, control, and strategic planning. Some of the key techniques and concepts are budgeting and forecasting, zero-based budgeting, involves building a budget from scratch, starting from zero and justifying each expense. Marginal costing, analyzing the impact of producing one additional unit on total cost and profitability, and then taking important decisions. Management accounting helps in taking various important decisions. It supplies necessary information to management. Decision making in management accounting involves using financial and non-financial information to make informed business decisions. This process leverages various tools, techniques, and analysis to guide management in strategic and operational choices. Identifying the problem or opportunity. Recognize and clarity define the issue or opportunity that requires a decision. Then gathering relevant information. Collect and analyze data including financial reports, cost information, and market trends to understand the context. Analyzing options. Evaluate different courses of action using techniques like cost-benefit analysis, break-even analysis, and risk assessment. Then, achieving of objectives. In management accounting, the accounting information is used in such a way that it helps in achieving organizational objectives. Achieving objectives in management accounting is effectively utilizing financial and non-financial information to guide an organization towards its strategic and operational goals. This involves a series of systematic steps and the application of various tools and techniques to ensure that decisions are aligned with overall mission and the vision of the organization. No fixed norms followed. In financial accounting, certain rules are followed for preparing different accounting books. On the other hand, no specific rules are followed in management accounting. No fixed norms followed means that there are no standardized rules or procedures that must be adhered to universally. Unlike financial accounting, which is governed by strict standards like generally accepted accounting principles or international financial reporting standards, management accounting is more flexible. It allows organizations to develop their own systems, reports, and practices based on their specific needs, goals, and internal processes. Then, increases efficiency. The purpose of using accounting information is to increase the efficiency of the concern, supplies information on our decisions. The management accountant supplies information to the management. The decisions are to be taken by the top management only. Concerned with forecasting. Management accounting is concerned with this feature. It helps the management in planning and forecasting. Management accountants use various tools, techniques such as budgeting, financial modeling, and scenario analysis to create forecasts. These forecasts can cover various aspects of the business, including sales, expenses, cash flow, and capital expenditures, providing a roadmap for achieving the company's strategic objectives. Okay, let us see the scope of management accounting. First one is financial accounting, cost accounting, financial management, budgeting and forecasting, inventory control, reporting to the management, interpretation of data, control procedures and methods, internal audit and tax accounting. Okay, let us see the financial management. Financial management is concerned with the planning and controlling of the financial resources of the firm. It deals with the raising of funds, their effective utilization. Key areas includes financial planning and analysis, capital budgeting, risk management, budgeting and forecasting. Budgeting means expressing the plans, policies and goals of the enterprise for a definite period in future. The targets are set for different departments and responsibilities are fixed for achieving these targets. Resource allocation. Allocates resources effectively to various departments or projects. Control sets financial targets and standards for performance evaluation. Planning assists in strategic planning by setting financial goals. Then inventory control. Inventory is used to denote stock of raw materials, goods in the process of manufacture and finished goods. The scope of inventory control includes inventory valuation and stock management. Inventory valuation. Determining the value of inventory using methods such as FIFO, LIFO or weighted average. Then stock management. Setting optimal inventory levels to avoid overstocking or stock outs. Reordering. Establishing reorder points and safety stock levels to ensure continuous supply without excessive inventory. Then reporting to the management. One of the functions of the management accountant is to keep the management informed of various activities of the concern to assist controlling the enterprise. It encompasses the preparation, presentation, analysis of financial and operational information to support decision making and strategic planning. Financial performance reports. Profit and loss statements, balance sheet, cash flow statements. Profit and loss statements detail revenues, expenses and profits to assess profitability. Balance sheet provide a snapshot of assets, liabilities and equity. Cash flow statements track cash inflows and outflows to the management liquidity. Interpretation of data. The management accountant interprets various financial statements to the management. These statements give an idea about the financial and the earning position of the concern. Control procedures and methods. Control procedures and methods are needed to use various factors of production in a most economical way. The studies about cost, relationship of cost and profits are useful of using economic resources efficiently and economically. And then internal audit. Internal audit system is necessary to judge the performance of every department. The actual performance of every department and an individual is compared with the predetermined standards. Tax accounting. In the present complex tax system, tax planning is an important part of management accounting. Income statements are prepared and tax liabilities are calculated. Let us see the functions of management accounting. First one is planning and forecasting, modification of data, financial analysis and interpretation, facilitates managerial control, communication, use of qualitative information, coordinating, helpful in taking strategic decisions, supplying information to various levels of management. Planning and forecasting. Management fixes various targets to be achieved by the business in near future. Planning and forecasting are essential for achieving business objectives. Strategic planning. Long-term goals, establishing long-term objectives and strategies to achieve the organization vision and mission. Resource allocation determines how resources will be allocated to meet strategic goals. Capital budgeting. Investment decisions assesses and plans for capital expenditure such as purchasing new equipment or expanding facilities. Financing. Determining facilities financing determines the best mix of financing options for capital projects. Modification of data. Management accounting helps in modifying accounting data. The information modifies in such a way that it becomes useful for the management. Data accuracy and correction. Error correction, identifying and rectifying errors or inaccuracies in financial records and reports. Reconciliation, ensuring consistency between different data sources or financial statements. At a segmentation and analysis, categorization, dividing data into relevant categories, for example, product lines and cost centers, to facilitate targeted analysis. Various analyses, modifying data to compare actual performance against budgeted figures and analyze variances. Next one is financial analysis and interpretation. Management accountant undertakes the job of presenting financial data in a simplified way. Financial data is generally collected and presented in a technical way. Financial analysis and interpretation in management accounting involve evaluating financial data to assess the organization's performance, make informed decisions, and support strategic planning. Next one is facilitates managerial control. Management accounting is very useful in controlling performance. All accounting efforts are directed towards control of the enterprise. Managerial control in management accounting refers to the process and mechanisms used by managers to ensure that organizational goals are met and resources are used effectively. It involves setting performance standards, monitoring actual performance, and taking corrective actions when necessary. Key functions are setting standards, monitoring performance, and evaluating performance. Then communication. Management accounting establishes communication within the organization and with the outside world. The management accountant prepares reports for the benefits of different levels of management and the employees. Use of qualitative information. The field of management accounting is not restricted to the use of monetary data only. It collects and uses qualitative information. Coordinating. The coordination among different departments is essential for smooth running of the concern. Management accountant acts as a coordinator among different financial departments through budgeting and financial reports. Helpful in taking strategic decisions. Management accounting helps in taking strategic decisions, supplies analytical information, regarding various alternatives, and the choice of management is made is supplying information to various levels of management. Every management levels needs accounting information for decision making and policy execution. Top management takes broader decisions and leaves day-to-day decisions for the lower levels of management. Need and importance of management accounting. These are the points to be covered in need and importance of management accounting. First one is increases efficiency, proper planning, measurements of performance, maximizing profitability, improving service to the customer, effective managerial control. First one is increases efficiency. Management accounting increases efficiency of business operations. The targets of different departments are fixed in advance, and the achievements of these goals are a tool for measuring their efficiency. Proper planning. Management is able to plan various operations with the help of accounting information. The technique of budgeting is helpful in forecasting various activities. Measurements of performance. The system of budgetary control and standard costing enables the measurement of performance. In standard costing, standards are determined and then actual cost is compared with the standard cost. Maximizing profitability. The truth of various management techniques is to control cost of production and increases efficiency of each and every individual in the organization. The steps of controlling cost are able to reduce cost of production. Improve service to the customer. The cost control devices employed in management accounting enable the reduction of prices. All employees in the concern are made cost decisions. Effective management control. The tool and techniques of management accounting are helpful to the management in planning, coordinating, and controlling the activities of the firm. These are the limitations of management accounting based on accounting information, lack of knowledge, intuitive decisions, not an alternative to administration, top-heavy structure, and then evolutionary stage based on accounting information. Management accounting is based on data supplied by financial and cost accounting. Historical data is used to make future decisions. Correctness and effectiveness of managerial decisions will depend upon the quality of data on which these decisions are based. Intuitive decisions. Though management accounting provides scientific analysis of various situations and enables decision making based on facts and figures, there is a tendency to make decisions intuitively. Management may avoid a lengthy course of deciding things and may take an easy course of arriving at decisions using intuition. Not an alternative to the administration. Management accounting does not provide an alternative to the administration. The tools and techniques of management accounting provide only information and not decisions. Top-heavy structure. The installation of a management accounting system needs an elaborate organizational system. A large number of rules and regulations are also required to make the system workable and effective. The evolutionary stage. Management accounting is only in a developmental stage. It has not yet reached a final stage. The techniques and tools used by the system give varying and differing results. Personal bias. The interpretation of financial information depends upon the capability of interpreter, as one has to make a personal judgment. There is every livelihood if personal bias in analysis and interpretation. Psychological resistance. The installation of management accounting involves basic changes in organizational setup. New rules and regulations are also required to be framed with which affect a number of personnel, and hence there is a possibility of resistance from some quarters or the other. Let us see the meaning of management accountant. Any person responsible for the supply of accounting information to the management is called management accountant. These are all the functions of management accountant. First one is planning for control, reporting, next evaluating, then administration of data, and then appraisal of external effects, Next one is protection of assets. First one is planning for control. Management accountant establishes, coordinates, and maintains an integrated plan for the control of operations. Such a plan would provide cost standards, expensive, budget, sales forecast, and etc. It involves the planning and controlling functions of the accountant, involve preparing for future financial activities and monitoring performance to ensure objectives are achieved. Next one is reporting to the management. Management accountant measures performance against given plans and standards. The results of operations are interpreted to all the levels of management, that is top level, middle level, and lower level. The reporting functions of an accountant in management accounting involves preparing and delivering financial and operational information to support decision making and performance evaluation. This function is crucial for providing insights into the organization, financial health, and operational effectiveness. Next one is evaluating. The management accountant should evaluate various policies and programs. The effectiveness of planning and procedures to attain the objectives of the organization will depend upon the caliber of the management accountant. In management accounting, the evaluation function of a management accountant involves assessing and analyzing financial and operational performance to provide insights into the effectiveness of business strategies and operation. This function supports decision making and helps ensure that organizational goals are met. Administration of tax. Management accountant is expected to report to government agencies as required under different laws and to supervise all matters relating to taxes. In management accounting, the administration of the tax function involves managing tax-related activities to ensure compliance with tax laws, optimize tax liabilities, and support strategic financial planning. Appraisal of external effects. Management accountant is to assess the effect of various economic and fiscal policies of the government and also to evaluate the impact of other external factors on the attainment of organizational objectives. The appraisal of external effects in management accounting involves evaluating how external factors impact the organization's financial performance and strategic decisions. This function is crucial for understanding the broader business environment and its influence on the company's operations. Protection of assets. The protection of business assets is another function of management accountant. This function is performed through the maintenance of internal controls, auditing, and assuring proper insurance coverage of assets. The protection of assets function involves implementing measures to safeguard an organization's assets from loss, theft, misuse, or mismanagement. This management ensures the integrity and value of assets, supporting overall financial stability and operational effectiveness. Thanks for watching. Thank you.